lot of people look at that and think, oh, there's no way I want to buy an asset that's got a premium to the underlying net asset value to the company. But in this case, I actually think therein lies the opportunity, not the problem. And if you think about this from a valuations perspective, if we think we're going into a bull market for the next 12 months, and we're going to get I believe we're going to get somewhere between the 3 to 10x in the price of Bitcoin, we're effectively paying next year's price for MicroStrategy today. So we're only paying 1 year's times earnings because it's going to be that value. The underlying is going to be the MNAV in 12 months' time from now.
And the addition to that is that the convertible bond market doesn't give a shit about the MNAV because all they want is the volatility. So as long as they have the volatility side of it, they don't care what the MNAV is because they're not looking for exposure to the underlying Bitcoin. They're looking for exposure to an asset, a tool, a financial tool that gives them the volatility that MicroStrategy gives them. However, MicroStrategy gets that is up to MicroStrategy, but the actual convertible bond market is not interested in the underlying Bitcoin to a certain extent because all they want, the asset to them is the volatility. So you could see that MNAV expand quite handsomely and they'll still keep buying. And then you've got index inclusions that are coming in now. The NASDAQ, I think, is on the 29th of November. Then you've got the S&P 500 into next year, I think January time next year. So there's just capital here that retail is not going to be able to understand. Value investors are not going to be able to understand because the capital. Saylor has done a great job at basically turning MicroStrategy into a platform of speculation on Bitcoin for which institutional capital, they have nowhere else to go to do this.